Shekhar, MD and CEO of the company, joins us on the show right now. Mr. Shekhar, morning. Good to have you on the show. And firstly, here's wishing you a very happy 2020 from all of us. Wanted to understand what your view is on the global and domestic HPC market. And are we seeing a slowdown? What are key customers reporting about volumes at their end?
The HPC market, I would say, is stable or showing a mild growth. What is interesting is the trend of premiumization, which is pretty prominent, and we have seen the e-commerce channels business doing pretty well. I do think, I would like to believe that the mass market is still under pressure, and the growth there is a little tepid. But however, as far as premiumization as a trend is something that is catching up very well, and you see an emergence of a number of players in the e-commerce space with respect to the home and personal care category.
So are you completely...
Another important thing is that fabric care...
Sure, go ahead, please.
Yeah. Fabric care is another category or another segment that has been showing a decent growth. Yeah.
Okay. The last quarter, and if I just look at the earnings, indicated a slowdown on a year-on-year basis for you. Is it looking like this year is going to have a lower volume impact due to poor economic conditions, or like you're saying, because of all these e-commerce channels, volumes is not going to be an issue?
On an overall basis, I think the sector is not going to show any decline. It will show a stability and possibly a mild growth. Looking at the overall category, however, individual segments may have difference with respect to growth. Some could be a mildly decline, but overall it is a stable scene.
Stable, that you are growing at historical growth rates, or you're not contracting?
No, we are not contracting. I would say we are stable. I mean, vis-a-vis last year or vis-a-vis the last quarter, we are seeing a stable situation.
When you talk to your buyers, or in this case OEMs, what is the communication you're getting for 2020? Because when we started 2019, things were looking up. Everyone from autos to FMCG to consumer durables to white good companies, they had a very bullish and a rosy outlook for 2019, which got challenged. 2020, it's the reverse. Are they admitting to the problem, or are they optimistic as we look into the future?
I would say that they are pretty cautious. They are waiting to see the economy looking up maybe in the next 1 or 2 quarters. So they are pretty cautious. They are not pessimistic, and I would say they are not overly optimistic.
I'm just going to ask you a very broader question, and we've not discussed this at least on this forum, and just for the benefit of our viewers and for your shareholders, how should one look at your company? I mean, is your company more like a business which is a stable business, but it will eventually be a cost plus business, which is that the more you will expand, the more money you will make? Or you think you are beyond a cost plus business? I mean, you have your internal efficiencies and ratios which will continue to surprise us.
No. I think we should be looked at as a company which drives innovation, which is at the cutting edge of innovation, which is at the cusp of various trends which rules this industry. And as you know, this industry is particularly over the last few years has become much more environmental conscious, much more driven by safety, and more driven by new requirements in line with the aspirations of consumers, as well as the various global trends which are happening. So we see a movement of consumers towards mildness. We see a movement of consumers towards more and more safety and sensory. We see a movement of consumers towards more non-toxic preservation. and more variety. And I think Galaxy has been at a cutting edge of innovation with respect to responding to these various consumer needs. So we as a company, and both as an Indian player as well as a global player, are oriented towards innovation to be able to respond to the various evolving and changing consumer needs.
Just to understand as well what your current capacity utilization levels are, will you be initiating any more capex in the near term? How much this will augment revenues, just to get an understanding of that?
See, we have implemented a significant amount of capex over the last year. Last year, almost we spent 160 crore capex. But in the coming year also, I think we will be spending approximately 150 crores or so. But largely, it will be for our what we call our pilot plant facilities and R&D facilities at Tarapur to equip ourselves in terms of a pilot plant development of the various innovative products that comes through our labs in Mumbai, TTC. So the investment, as you all know, we always create capacities in anticipation. We have completed our capex in what we call one major capex for performance surfactants in Jagadia. There are other capexes which are undergoing implementation. They will get commissioned by the third quarter of this year. We have prepared ourselves and equipped ourselves very well in Egypt, and our the new factory in New Hampshire, USA, will be getting commissioned in the next 2 weeks or so. So that's going to be a brand new factory where we are shifting from a leased facility to our own facilities in New Hampshire to make proteins, and that is going to be commissioned in the next 2 weeks or so. So Galaxy always invests for the future, and so our capacity utilization as far as the last quarter will be approximately in the region of maybe about 70 to 75%. And I mean, that's a pretty normal situation, I should say, as far as our capacity utilization is concerned.
Great to speak with you, Mr. Shekhar. Thanks so much for taking the time out and speaking with us today.
Thank you very much.